Hey there, and welcome to Leaders in Payments and FinTech, the podcast brought to you by Dunn & Company. I'm Daviden, and in this series, we're talking to the people driving real innovation in payments and financial services. From embedded finance to AI agents, real-time payments to regulatory shifts, our guests are the ones turning big ideas into real-world impact. If you're enjoying this series, please be sure to follow us on Spotify, Apple, or wherever you get your podcasts. Let's dive in. And as mentioned, today we really are joined by one of those leading the change in the payments industry. I'm pleased to be joined by John Lunn, current CEO and founder of Gr4vy. John has a tremendous experience from CyberSource and PayPal most notably, but recently with Gr4vy. John, please introduce yourself to those who don't know you.
Well, thank you very much. No pressure at all, I guess. But thank you for the introduction. Yes, so as you said, I'm John Lunn. I'm the CEO and one of the founders of Gr4vy. We're a leading payment orchestration platform trying to change the way that people, merchants interact so that they have control of their payments. So thank you for the kind introduction. I think you've shared background. I've been doing payments since the time of the dinosaurs. From before we had online payments, went through the whole .com boom, getting that up and running, and then the birth and evolution of PayPal, right through to now where orchestration's the thing that we need to be doing.
I mean, you mentioned it, orchestration. It is a buzzword in payments, and, you've seen it from CyberSource, first PSP and PayPal. What is orchestration? How does it differ from existing payment infrastructure technologies that merchants may be aware of?
Yeah, so bugbear here, so warning, I might go ranting. Look, payment orchestration or pure play payment orchestration is a technology layer that sits between primarily the retailer and the entire payment ecosystem. So it's an integration layer. It sits in the middle. Think of it something like Twilio for payments. A layer that sits in the middle that takes the complexity out of integrating to multiple payment providers, and allows you the flexibility and control that you need to run your payment infrastructure. And to be clear, everybody does payment orchestration already. Every merchant in the world has payment orchestration. They just don't call it that, right? They've probably got a payments team that's built a thing or router over time that's doing that. But payment orchestration or pure play is an actual technology here. And what's happened over the last few years is a number of companies have decided this is a cool thing. Two buzzwords, right? So I think, look, I'll tell you what payment orchestration isn't, and I always get in trouble with this. Like, a gateway that has connections to multiple acquirers is not an orchestrator. It's a gateway, right? They might use the words payment orchestration to do that, but it's not payment orchestration. That's just a gateway with a bit of lipstick on it, right? I think the other thing is, offering a PSP, offering multiple payment options, again, is not orchestration. That's a PSP with multiple payment orchestration, right? An orchestration layer, payment orchestration layer, is a technology layer that sits between those companies and the retailer and is helping the retailer become empowered, essentially.
What kind of problems, pain points is orchestration solving for merchants? I assume that not everyone should implement payment orchestration, and there are specific use cases, specific verticals where orchestration really does solve a problem for merchants.
So I disagree. I think every retailer should integrate orchestration, but I might be biased. But no, I think they should, because essentially, you don't build your own telephony systems anymore, right? There's lots of things you don't do anymore, right? You don't service your own car. There's lots of things there, right? Technology is here to make our lives easier. Orchestration is here to make the lives of the head of payments and the payments team easier. So yes, it solves a whole variety of problems, but essentially the main thing is it stops you having to build custom every single time you want to do stuff. That's the biggest thing here. So not needing every time you want to make a change to go arm wrestle your other colleagues to get engineering time to do that, right? That goes away. This comes in your control. You're able to go and add a new gateway, payment option, go to a different country, make a change, implement network tokens, all of these things. You're able to do that without needing to build something and have engineers involved. And that's the number one benefit of orchestration. Outside that, there's a whole load of other stuff. Redundancy, scalability, really, really important. We've all seen over the last year, the amount of downtime that's been across the payment industry. And it's not the payment industry's fault. There's been a significant number of cyber attacks that have been targeting payment companies, but there has been downtime. And, most merchants experience downtime once a year, and it's really expensive because you can't take a payment, you're off. Right. So you end up needing to, and 60% of the North American retailers said last year they're adding a second gateway because you need redundancy. When you're doing that, adding a payment orchestration platform at that time is exactly what you need, because what a payment orchestration platform will do is route stuff to your primary gateway, fall back on a secondary, make sure that you have that redundancy and that scalability. And, God forbid you need to add a third gateway. It's a 5-minute job, not a 8-month integration time. So it's solving redundancy. It's solving the need for custom code. It gives you so much power if you can switch PSP in 5 minutes, right? When it comes to that contract negotiation, if you can say, hey, you know what? If you don't, keep your prices stable or et cetera, I'm just going to switch to a different gateway. In the old days, the PSPs were like, good effing luck with that, right? It's going to take you 8 months. Now it takes 5 minutes, right? With an orchestrator. So you can negotiate better prices. You can own that. If you want to implement something, you're no longer held hostage by whatever gateways you're connected to, because you have a choice. You can go in through an orchestration platform, integrate an alternative payment type directly. If you want to use network tokenization, or if you want to use click to pay, it's in your control. It's no longer you going to your provider and say, hey, can you support this? You now have a platform that allow you to say, there's 10 ways to support this. Which one do I want to do? So we could go on, but like on average, every client we talk to, we help do an ROI calculator. Every client comes back with enough return on investment to pay for any cost that Gr4vy would give them 10x and above.
Yeah, no, it's interesting, and I'm sure some of the PSPs might disagree with some of your comments. But it's the world is interesting because there are differing views and opinions. But it's interesting what you talk about, that any merchant can benefit from orchestration. And I think when you dive deeper into that statement and you look at some of the reasons behind, and you talk about a safe for when there are outages, or having flexibility to shift volume from one to another based on performance, based on the data that you see. It's also a tool for bargaining. You can negotiate with the PSPs that you're working with. If you're implementing orchestration, you're more in charge of your payments, your data. Is that what you're seeing, that orchestration is becoming a critical part of merchants' infrastructure layer when it comes to payments, rather than just a tool for payment optimization?
Yes, absolutely. I mean, we talk about empowering our merchants, and I mean, it's very telling that not a single one of our merchants has switched Gr4vy off, unless they've gone out of business, frankly. So it's one of those things, like, one of our investors at the beginning told me, John, you sell to solve a problem, but people buy to solve future problems, right? And I think, look, you can put orchestration in as a point fix to a particular problem you have at the time. But the truth is, once you've got it in, you see the possibilities of everything else you can do with it. And I often will sit with a prospective client and say, give me your roadmap. Tell me the 60 things you need to fix. And then I'll tell them, having looked at it, you can add orchestration, you can take 40 of those off the list, right? Yeah. And it's like once you've got the flexibility, once you've got the power to do this, then you can get a lot more done. And, we had a lovely note written to us by one of our clients, and it was actually their engineering team, and they're a company that does computer games. And their engineering wrote us a really nice note to say, thank you, Gr4vy team. We all joined this company to write computer games, not write payment gateways. So it's that. Engineers want to be doing the fun stuff.
Yeah, absolutely. And if we just take a step back, I think Gr4vy has been around for 4 or 5 years now.
5 years to write the first line of code, yeah, on my sofa.
5 years, yeah. So it's been a journey. What were the initial problems that you saw in the industry that you set out to resolve by founding Gr4vy? What did you see in the industry that you thought this calls for a payment orchestration platform, and I'm going to be the one solving it?
Yeah, I mean, I like the best startups, in my opinion, are built from frustration, and Gr4vy was born out of pure frustration. So I was at PayPal. I was investing in really interesting payment technology around the world, and I was seeing really, really slow adoption. And I was frustrated because, I'd just gone and funded this company and it was taking forever. And so I just started talking to merchants and retailers and saying, what is the problem? Why is this so hard? And it really came down to it. It's the payments team, not the individuals, the concept of a payments team. And every merchant has one, right? When you're small, you start with one engineer who builds maybe to something like Stripe, right? And then 6 months later, they add Affirm, and then they might add PayPal, and then they go global. They might need a different PSP. And merchants grow in one or two ways in that. The first way is they add more and more people to the team, right? And you've got some very high-tech companies that have huge payment teams of over 100 people sitting there just doing payment. And you kind of look at it and go, guys, you stream music or you do movies or whatever you do. Why have you got this massive payments team? This makes no sense. Or you go the other way, which is you end up with a 6-person payment team and a roadmap that's 6 years long. And I always joke, you never meet a happy head of payments because they only ever get what they need. They never get what they want, right? And so it's that. And it kind of, what struck me is the crazy thing is everybody's building the same thing. They're essentially, now we call it payment orchestration. It didn't have a name at the time. But they're essentially building a router or router, as we call it in England, to send payments they need to go to. They're all building it with custom code. They're all building it independently. And, if we build a tool that does this, it's going to help everyone. And that was the genesis of the company.
And that makes sense. And I think a lot of those who are listening share a lot of the frustrations and challenges that you outlined, especially from the merchant standpoint. You talk about tokenization and leveraging network tokens, and there's been a lot happening in the tokenization space, and tokenization and vaulting are central to merchant flexibility, which is one of the benefits that you highlighted orchestration bringing to the table. In your view, how do orchestration layers enable that data in token portability at scale, and what are the benefits there?
Yeah, I mean, look, there's vaulting is an important thing, right? And a lot of people, mainly because of PCI, they don't want to be storing card details, right? So a lot of people have vaulted at maybe a PSP level. And that comes with its own benefits and its own problems, right? If you vault at a PSP level, what you get back is a PSP token that's specific to that PSP. And that's great as long as you want to stay with that PSP forever, right? Because essentially you're now tied to them. They've got all the card numbers, you've got some tokens, right? So I think, and it's not an orchestration thing. It's a feature of orchestration. And there's companies out there like Basis Theory and Very Good Security and others that have built pure token vaults. Because what we've all realized is you as a merchant need to own that token vault, right? Because you need to be the one who can decide where your data sits and who it goes to, so that you're, again, not tied to a particular PSP, but you've got that power yourself. Orchestration plugs on top of a token vault. So, of course, Gr4vy has its own token vault, but we also work with the people I've mentioned. So it doesn't matter who owns the token vault, who runs the token vault, as long as it's available. And that then gives you the flexibility to pull in, whether it's a card number, whether it's a PSP token or anything else into your flow without needing to take the burden of PSP. PCI, I should say. And so that's part of it. Network tokens are a different thing, right? And they're not, you need both. You need a vault and you need network. And I would strongly suggest you implement network tokens. Network tokens solve a different thing, and they solve it at the association, the card scheme level. And what we're all trying to do, and I'm a huge believer in this, is we're trying to kill the 16-digit card number. That's what we're trying to do. And it always astounds me that, everybody's been trained not to use the same password, right? Don't use the same password. But we all walk around with a 16-digit number on a piece of plastic in our wallet that we'll give to anyone who we want stuff from. it's a pain in the ass. Like that whole industry wide, it makes no sense anymore to have a one number that we can use anywhere. Like every year, 3 times a year, someone comes across my card number somewhere and defrauds me, and then my bank calls me and they cancel my card, and I have to wait 2 weeks for a new one to turn up, and all my subscriptions fail, and this goes wrong and that goes wrong. Not to mention that all those cards end up in landfill, so we're adding even more plastic to our drinking water, right? Like there's all kinds of stuff going on there, but this is crazy. Like, give me a particular number, a token that I can use when I want to buy from that customer, from that merchant, that only works when it's me, the merchant, and the card all together at once. So if they get hacked, they get lost, I don't need a brand new card every time. And it's safer, it's, better for the environment, it's better for the merchant, and more importantly, it's better for the consumer. So network tokens have got, it's the way we're going. More power to them. You get better auth rates, you get, lower fraud. All those things are great, but more importantly, you have happier customers, and that's what really matters.
Yeah, it is incredible when you stop and think about it. The way you described it, that we're walking around with plastic piece of card with a 16-digit number, and the industry has evolved so much, and yet that has been the same over and over many, many years.
So 1930s.
And I'm sure that, it's going to be one of the topics that we hear about in the industry. I do think MasterCard did announce that they're planning on killing the 16-digit PAN as well. So we're starting to hear about it. And in the future, we're for sure going to be talking more and more about it. So absolutely. On orchestration, there is one often cited criticism made of orchestration platform, which I'm sure you have your views and opinions on, which is that merchants that have a payment orchestration platform introduce a single point of failure when it comes to payments. What are your opinions on this?
I totally agree. If an orchestration platform is deployed as a SaaS model, you are introducing a single point of failure. And that is fundamentally why we built Gr4vy the way we built it. We have built a cloud. We haven't built a single point of failure. So very big difference in Gr4vy and everyone else out there. We deploy instances of Gr4vy for each of our clients, single tenancy, one or more of them, wherever they need them around the world. So there's not one Gr4vy, there's thousands of Gr4vy. So some of our customers have 8 different instances of Gr4vy in different data centers in different regions. And essentially, entire cloud platforms that we use would all have to go down at the same time for you to not have to have a single point of failure. So we conscientiously built Gr4vy to not have a single point of failure. And because we knew that was going to be the number one objection from day one, is why would I introduce a single point failure? We work with enterprise, we work with large clients. They care. They're not going to do that. They spend years architecting out single point failures. They're not going to introduce a new one.
It's one of the reasons why many enterprise customers use multi-acquiring, multi-PSPs. So introducing a single platform to manage all this had its benefits, but again, depending on how it's built, it does increase the risk. So very interesting to hear that that's how Gr4vy from the foundation, right? That's how you were founded,
look, it wasn't the easiest way to build a platform. We would have got to market much, much quicker if we built a SaaS, but it's turned out to be the right decision, not only for single point failure, but it also allows us to solve other problems like data residence. So, certain countries in the world, like India, payment data is not allowed to leave country. Yeah. We can deploy instances of Gr4vy in country, or, other parts of the world, like, it doesn't make sense, for example, in Australia, if you're using a US PSP to have a US orchestrator system sitting in the US, because essentially Australian customer is going to the PSP in America, back to the merchant in Australia, back to the PSP in America. Like, the latency is insane. It's up to 4 seconds in some cases, right? You don't want that, right? So having a system where you can deploy in any country means we can reduce latency, we can do data residency, and we can deal with things like GDPR and Australian data protection rules around the world as well.
And so when merchants think about managing payments, where are they leaving money on the table today? Where are some of the opportunities that you see when you talk to merchants?
I mean, there's a whole stack of them, frankly. One running 3D Secure, running anti-fraud solutions properly, taking advantage of network tokens. There's a whole load of scheme stuff that if you're not doing, you're leaving money on the table, right? I think. And there's incentives from card associations, there's incentives and places that you could be getting that might be helping with your development costs if you are implementing some of this new stuff. I think one of the biggest there is debit card processing. It's right, debit card should be routed to the debit network. And you were with me last week at PLS. I asked the entire audience who was routing debit to debit networks, and not a single member of the audience put their hand up. That is terrifying, right? Like it's 16 cents on average for a debit payment, right?
Or the PSP is or acquirer is routing and then keeping the
that's what you generally is. You're getting a blended rate from your acquirer PSP. That's, how they're pricing for you. But honestly, about what I heard, the latest stat is about 40% of US online payments are coming from debit cards. And if you think of that as a retailer, 40% of your debit transactions, you should be paying 16 cents, not 1.4 and above percent. That's a huge amount of money you're leaving on the table just by routing. It's not easy to do. Orchestration platform will definitely help you with it because you've got to identify the co-branded card. You've got to work out which version of 3D Secure to use on that card. You've got to send it to the correct debit network. And then frankly, you need fallback because, some of them are a little bit flaky. You might want to pull that transaction back if it fails and send it directly to, Visa, for example, to process if it failed. But you need to put those things in place, but the cost savings are huge just straight out the bat.
So, what I take it from your answer is that even though some merchants may have big payments team, there is so much to do every single day, every year. There are new rules, new changes to the industry. And so it's a constant battle on staying on top of what are the best ways to optimize how you manage payments to make sure that you're not leaving money on the table. Would you agree with that?
Absolutely. And then there's the fact that to maintain a existing gateway, on average, it's 100 hours of engineering time every year. So if you've got one gateway, you're probably spending 100 hours every year maintaining it. If you've got three, that's 300 hours just keeping status quo, right? And that's without adding any new functionality. So that's what when I joke about the unhappy head of payments, it's because there's a whole load of stuff you have to do, right? You have to implement some of the new card schemes, a new 3D Secure, there's a new PCI standard. Those are things you have to do. Now, there might be things you want to do. So maybe you want to introduce a buy now, pay later provider. Maybe you want to introduce an alternate payment type in Japan or another country. And that always gets pushed to the bottom of the list because all the stuff you have to do. Right. And so this opens, if you can get that stuff off your table and dealt with by an orchestrator, you can actually get to the stuff you need to do to grow your business. And I have, in this market, I will often go into a meeting. And I had a CEO turn to me the other day and said, how are you going to make me money? And I was like, we're a payment company. We shouldn't be making money. But the more I thought about it, it's like, actually, we will make you money. We'll make you money because this is money you're throwing down the toilet. So I'm going to give you back your money. That's different.
Yeah. It's a complex ecosystem. It's so complicated when you look underneath the hood and see all the different mechanisms, all the different fees, all the different options that you have. And I agree. It's not about, reducing costs, but you can actually make money just from being smart and knowledgeable on payments, which is very interesting to hear in 2025 that this is the case.
Yeah. Some things don't change.
So on orchestration, we discussed what the benefits are. When you talk to merchants, are there different values that you quantify to merchants depending on their setup, depending on who you talk to, or is it always going to be the same, 4 or 5 topics that are going to be the ones that merchants would benefit from, such as approval rates, having a fallback logic in case of outages from one acquirer PSP, router efficiency, or something else entirely?
Yeah, I mean, often we'll have a first conversation with merchant either because they've had an incident, right? That's often like something's gone down, something's broken, and someone at a senior level's gone fix this, right? We'll often have that. Or if PSP contract's coming up and they're now saying to the likes of Edgar Dunn, right? They're saying, go and help us determine what PSP we should be using here. And at that point, yourselves and others in the industry are saying, well, think about whether you want to introduce an orchestrator right now, because this then means you never have to do this again, right? You never have to go through this process again. It's just purely a commercial decision at that point. So we'll get pulled in at either those times, and we're usually pulled in for one of the reasons you mentioned, but we are very good at listening, and that's kind of core to what I've sat with the sales team. So like, we've got to be the best listeners out there, because if you listen, yes, there is the main problem, but people don't buy your solution because you solved the problem. They buy your solution because you're going to solve problems they got now and the problems they think they might have later. And that really is it. It's like, can you help with this? Can you help with that? And that's how we've ended up orchestrating on gift cards. That's how we've ended up doing all kinds of interesting things that even we hadn't thought was an orchestration use case, but absolutely it makes a huge difference to what merchants are trying to do. And we're constantly learning as well at how we can be more helpful. But it's great having a platform where you can do that, right? And you're not tied to legacy.
I mean, absolutely. That's kind of our experience as well when we talk to people in the industry and merchants, and you start off by one problem, which is what they may be aware of, and they talk to you about that problem. And then you start to look around and see, oh, you have a problem here as well. It's not just fraud and chargeback. It's also your authorization rates. It's also how you route transactions. It's very interesting to see, okay, you start with one, but then you uncover so many more problems, and you kind of just go and solve each. And it's very interesting and rewarding to do that. And you learn along the way as well, because it varies industry by industry as well. There are some industries that have very different payment flows. I mean, the easy example is travel, airlines, hospitality, very, very different from retail, very, very different from digital only recurring subscriptions, as you're fully aware. So every time you kind of can't apply the same methodology and tools. It's always applying the concepts, but to a different use case.
And what's changed is like, people have in the past always look at payments as a sort of utility, right? Something that you have to do the rest of your business. But actually, payments over the last years have become a competitive advantage, right? If you're able to go to where your customers are because you're supporting not only the payment types they like, but the use cases they need. I mean, buy now, pay later is a perfect example of this, right? There was a whole generation that wasn't buying from you until you added that buy now, pay later provider. And that generation's sticking with that payment method, right? They believe in it. That's how they like paying. And that's going to give you a competitive advantage over everyone else who hasn't got it, right? Those customers will come to you. They'll stay loyal to you and they'll stay with you. And being efficient about having a beautiful checkout experience, not having failures, not having a credit card processing form that looks like it was built in 1972. All these things, like, they drive a massive advantage to your business and allow you to win as a retailer.
Yeah, and just, following up on the alternative payment methods that you mentioned, buy now, pay later. We've been mainly focusing on cards as part of our conversation, and within that, we've been mainly focusing on the US.
Yeah.
But outside the US, there's a whole other, realm of payment rails, and there's a rise in account-to-account payment methods. PIX, UPI are the big examples in big markets, very successful. But then also, Switzerland has Twint, which is very, very popular as well. Yeah. So what role does payment orchestration platforms have when it comes to all these other rails? And we can lump in FedNow, ACH, etc.
Yeah, they're all different. That's the thing. It's like purely from a technology perspective, every single one is a brand new integration. Every single one has quirks of the way it works, from front end to back end, to how you're notified of transactions. Some of them don't even have webhooks, which is astounding. We're working one today that turned around and said, "Oh, we might refuse the payment 6 days after we've accepted it." And you're like, merchants are like, "But I already shipped the goods." And they're like, "Yeah, sorry." So there are all kinds of things there. There's some that settle in 14 days, some that settle in 30 days, right? So where payment orchestration helps is it takes the risk out of implementing. One, it makes it easier. Two, it helps standardize that into your current processes. And it allows you to experiment, which is the big thing. Because adding a new payment method might be the right thing for you, but it might totally not. And a good example of this is, I was at MRC in Barcelona talking to one of our friends in their space, and they sell luxury goods, right? And I asked them, well, why are you not offering buy now, pay later? And they're like, it's insulting to our clients. Clients would be insulted for us to assume they would want to pay later because we sell luxury goods, right? I mean, you never think of these things, but
Yeah.
having the flexibility to switch on a payment method, try it, see who it works for, customize those checkouts for the different customers, and switch it off if it doesn't work with a low technical overhead is hugely powerful for you as a merchant, right? There's a story of a US retailer implemented a buy now, pay later, added 8 months. The first day they had huge frauds and they had to switch it off. Their CEO was not a happy man, right? Like that doesn't need to happen anymore. Now you could use an orchestration platform. You could very quickly switch it on, test it. You could build in rules to say only do this for certain customers, A/B test it across the end, get it right and decide if it's right for you. And if it's not, swap it out for another one. We have over 400 payment methods on Gr4vy at the moment. So there's lots of choice out there that you could try and make sure you get it right and give yourself that competitive advantage.
Yeah, I mean, we use the word flexibility, and that is what I keep on hearing now, as you were saying, all the different payment methods and opportunities to test and verify whether payment method actually works for the merchants, which is, great for the merchants actually doing this kind of analysis and testing.
Yeah.
I'm sure this is not going to be something that you, as John Lunn, payment orchestrator expert, is focused on, but I would like to hear, looking forward in the future, there's a lot of talk, there's a lot of hype around certain topics such as stablecoins, agentic commerce. John Lunn, payment expert, not for orchestration. What are your thoughts on those topics, and where do you see the industry going, and what are some of the risks and challenges with those two in particular?
Well, stablecoins, I think the place for stablecoins is kind of replacing remittance technology. We got it today. So replacing SWIFT, replacing ACH. I think that's where it fits in. And frankly, that's where it's getting adoption. I think there's a lot we don't know right now that people are getting very excited by it. It is, it is a quicker way to do SWIFT. That's kind of where I look at it. There's lots of problems with the current systems of sending money internationally. Essentially, from the minute you send it to the minute it arrives as a sender, you have no idea what the hell your money is, right? You just don't know. It goes into a void and you hope it pops out the other end. And I think the traceable type technologies where you know exactly where it is, how it's running, it makes it more real time. All of these are great, and I think have a place in commerce, in actual retail. We don't see a lot of adoption at the moment. Are you really going to use a stablecoin to buy a pint of milk? No, because it's too much of a pain in the ass to go and get one in the first place, right? That's just not worth it. So I think where they'll fall in probably high value transactions, I think you'll see stablecoins in there, where, it'd be nice to be able to do escrow. It would not kill escrow completely, right? It'd be love to be able to click on a button and the money moves instantly. So you don't need to escrow for things like property, art, all of that stuff. I think there's a place for it. But in day to day buying clothes, buying, video streaming or anything like that, I just don't see it. It's too much friction. That's the way I look at it. On agentic, I really like agentic. I get super excited by agentic. I like the idea of agents running off doing my shopping for it. I don't love shopping. It's not what I love doing, but I really like it. Well, I think the conversation very much has been, and what you've seen in the press has really been articles about how do I get my payment system, whether it's a Visa, a MasterCard, or a PayPal, to work with the agents themselves, right? So how do I get ChatGPT to work with PayPal? That's the first thing. But no one's really having the conversation about how does it work with a merchant, all right? And I think that's the bit I'm passionate about, because at the moment, there's a few different things there. The first is an agent looks exactly like a fraudster, right? That's the point. And I think looks like a bot. So most fraud services out there will automatically be blocking these things. And we need a way for an agent to be identified as an agent. And at the moment, the authentication layer is kind of missing in agentic commerce. So how does a merchant know this is an agent? And then how does a merchant treat it slightly differently to run through the flow? That's the first thing. No one's really talking about that. The other thing is, look, honestly, if I'm a scammer, I will go and set up 100 websites that will honeypot agents into them. Like I'm going to sell Nintendo Switches for 20% less than market share. These agents are basically say, go and get me a cheap Nintendo Switch. It'll fall straight into that honeypot, right? And so there is that side of it that I think we need to solve. And then the payment bit's not the hard bit, right? The payment bit is this agent's got to be able to look at inventory, see what's there, see if it's got your size, add it to a shopping cart, and then get your details in there and make the payment. But the first bit, again, not a lot of people talking about. Everyone's talking about how you move the money, right?
Yeah.
Moving the money's easy. The first bit's more complicated. So I think, look, we have in our heads what we think the solution is. And I think the next month I'll write something about it. We've built proof of concept. We're playing around with it. I think there's a way to do this, and there's a way to do it where the merchant's driving it and the merchant can treat an agent like an agent, not an agent pretending to be a human. And so I think that I find exciting. And does it kill the front end of the website? Are we only going to be shopping through agents? I don't think so. I think it's going to be a percentage of people like to shop with agents. But there's people who are visual and they want to see pictures. There's people who like the old experience. Same way there's people who still do mail order and still do telephone orders, right? Will it become the majority? No, I think we're going to end up with both experiences. And I think that's good.
Yeah, no, I completely share that vision. It's not going to be, within the next year or instantly everyone just starts using agents to do our shopping. It is going to be gradual. I mean, just look at how long it took for e-commerce and mobile commerce to take off. We're probably going to see a faster adoption curve because adoption curves are just shortening the time to gain critical mass adoption. But at the same time, it is not going to be all at once. And we do talk to merchants and ask them about what are your thoughts? What are you expecting to happen?
Yeah.
And the thing that they keep on telling us from the merchant perspective is fraud. Lots of fraud, lots of chargebacks. And how do you defend against the chargeback when it's not the consumer itself making the purchase, but they've somehow given authority to an agent, a bot, to make the purchase? That is something that I think needs to be figured out by rules. And we know very well that technology always goes faster than rules and policies in place. So it is going to be interesting.
I give my kids my credit card to go and buy bubble tea. So what's the difference, right?
Okay. Well, John, it's been such a pleasure to have you as part of our podcast series. I would like to thank all of you for joining us on Leaders in Payment and FinTech from Edgar & Company. If you have enjoyed today's episode, please hit follow or subscribe wherever you watch or listen. There's plenty more great conversations coming your way. We're always eager to hear from you. So head over to our website, linked in the show notes, and click connect with us to share your ideas or just to say hello. Until next time, thanks, John. Take care.
Thank you.